probably fine to jump in for now. And yeah.
Okay, so it's my pleasure to introduce Andrew Yu. So he's associate professor at O'Neill SPIA. He has many interesting things to check in his CV. I will just do him some cherry picking, but he's a fellow of the Resources for the Future in Washington, D.C. And then he specialized on climate change policies and environmental policy, especially in developing countries. And today he's going to be talking about a very, very important topic about carbon taxes in industrializing countries with a focus on India, China, also some connections with the US too.
Exactly, yeah.
So thank you very much for being here.
Okay, yeah, thank you so much for inviting me. Super happy to talk about this topic. Like I said, I am used to the economist style of presentation where people jump in with questions and almost attack me, but that's normal. It's normal if you feel so inclined. Okay, so as I said, my paper concerns carbon pricing. So when I was a grad student, a PhD student in 2012, carbon tax was viewed as this like very esoteric or quixotic like economist topic, where basically it was like really great for an ideal situation, but viewed as politically impossible. Basically, people felt like, to control emissions, no country would ever actually do it, and seemed very like, idealized but impossible. Fast forward to today, and actually there's countries all over the world implementing carbon pricing. So to be concrete of what I mean by carbon pricing, I'm talking about carbon taxes on carbon and emissions trading systems, or ETSs. That's effectively a price on carbon because you are restricting, carbon emissions to those companies that buy a permit first before emitting. And so now the World Bank has a carbon pricing dashboard, which has evidence of the rollout of these carbon pricing systems all over the world. So today, at least 53 countries have implemented carbon pricing, including 40 subnational jurisdictions. That means like provinces or cities who have implemented it themselves. So it's all over the world. It's happening now. And what you'll notice, of course, that the biggest emitters, China just rolled out a system, which covers a minority of its emissions, but still very promising. But the second and third biggest emitters, the US and China and India, which are also the foci of my presentation, haven't covered anything yet. So, and
there are some of the regional, is that right, trading systems
correct.
In the US, or
correct.
Is that?
Yeah, we have
I see the little dots there.
Right,
yeah.
We have RGGI, which is like the Northeast Regional Greenhouse Gas Initiative.
Yeah.
And then California also has a cap and trade system.
Trying to jump in, like you said, are those connected with the other schemes? You're going to get to that.
I'm not going to talk about that particular topic,
okay.
but the short of it is that the systems don't yet trust each other because it's hard to actually verify that 1 ton of emissions in here in locality A is the same as monitoring it. Yes, correct. So people are like, oh, we should hook up, but it's more of a conceptually, theoretically fantastic, but practically quite difficult. Sure, of course. Okay, and why countries haven't implemented it is that the conventional wisdom has been that if you control carbon emissions, this comes at a cost to the economy. Right, that it comes at a cost to development and to welfare. So, for example, Barack Obama, not exactly, when he was negotiating climate change policy with Xi Jinping, said, "I think it's important for us not to pretend that there are no difficult trade-offs at all. The transition will require some tough choices to be made." In other words, trying to prepare the American public for if we control carbon in our economy, we're expecting some negative impacts on in the economy. India has been mostly opposed to controlling climate change in its own borders, summarized by this reason: developing countries cannot and will not compromise on development. So the idea being that developing countries, their first priority should be on economic development, and controlling carbon emissions seems like a much secondary priority, far down the list of things that should be handled by these countries. And so negotiations actually proceeded much this way, kind of with, in fact, the Kyoto Protocol, this big international agreement between countries, found that all responsibility for cutting carbon should be borne by developed countries, developed economies, and developing countries would share no burden of cutting their emissions at all, right? In fact, I've heard some developing countries speculate that basically climate change economics is like this big, is like a scheme in order to cut off the ladder of development, right? So developed countries, kind of climb this ladder and become rich, and then basically they're cutting it off after them. The developing countries can't climb, right? So it's kind of like very strongly held intuition that essentially that climate policy is bad for the economy. And now this lines up with tax policy, right? So tax theory in economics is primarily advocated for, like, the optimal tax system is one that's like very broad based, but like low in rate, right? That's kind of the ideal system. The idea is distribute the burden as widely as possible. So if you need to raise a certain amount of revenue, you can do it through minimal distortions in the economy. And if you think about it, then a carbon tax actually is bad at that, because a carbon tax primarily taxes carbon intensive sources, which are things like coal, natural gas, oil, right? So like very focused commodities. So in other words, it goes against the prescriptions of classical tax theory. And this literature review says that basically this is the case, that essentially when you shift taxes from, something like income and onto emissions, that basically is bad for welfare, bad for the economy. Okay, so I've set up my like straw man, right? The prior conventional wisdom, carbon pricing, bad for the economy. So what do I argue in this paper? So this paper is meant to be provocative, and the idea is that maybe carbon pricing can actually be good for the economy. Carbon taxes can be good for welfare. And the ideas for this come from some paper, kind of collate some papers that I've written and other contributions to the literature, which talk about the theoretical properties of carbon pricing. And so many people have the intuition of carbon taxes that they're similar to other kinds of like sin taxes we have. So like alcohol or sugar, soda, whatever, right? Cars, whatever. But actually, carbon pricing taxes energy. And energy has quite different properties than other kinds of commodities. So this first paper we published said that basically the informal, so its background, the informal sector are portions of the economy that escape classic regulations and taxes. So we don't interact with this so much in Bloomington, but some examples in my own life are like when there's a big snow, right? These guys in a pickup truck like drive by my house and they knock on my door and they say, "Hey, we'll shovel your driveway for like $40." And we'll say yes or no. Shoveling the driveway is pretty tiring. So we might or might not do this, but this is an example of informal activity because I really doubt those guys are reporting their activity to the IRS. Similarly, we'll do babysitting, right? So babysitting is another sector where it's like, you could have daycare or you could have like a nanny or an au pair or a teenage friend babysit your kid for you. So in the US, which is one of the most honest countries, statistically speaking, the informal sector is very, very small, right? But in other countries, the informal sector is actually huge. So oftentimes, many people's first interaction with a developing country, like you fly to China or Mexico or something, and there are people who greet you at the airport and they're like, "Hey, can I give you a taxi ride?" Right? And it's not like a taxi, it's like their car, right? And they're like, we'll do it for, whatever, 300 pesos or whatever to get you to your destination. And so that's informal sector activity, this underground sector, which is actually huge, which is actually a huge portion of economic activity in continents in Asia and Africa, South America. And so the idea here is that actually taxes on energy can actually reach the informal sector where taxes on labor can't, right? So think about those guys in the pickup truck. They still have to buy gasoline and they still have to buy electricity. And there's no, when you buy gasoline from the pump, it actually includes a bunch of taxes that you never even see. If you wanted to dodge those taxes, it would actually be impossible, right? You still have to buy gasoline and electricity. And so by taxing, energy commodities, which are a necessity consumed even in the informal sector, the idea is they're actually able to reach these areas of the economy that were previously untaxed. Right? And so that's good for welfare because you're able to spread out the tax burden some more. The second idea here is that is related but different, which is about tax evasion. So tax evasion and its closely related cousin, tax avoidance, consists of all the activities that people do in order to minimize their tax burden. Right? So this can be like very innocent and small. So this is like a waitress who doesn't report all her tips, right? She got tipped $100, but she reports $50 in tips. If you're like middle class, maybe you're like thinking about avoiding taxes through like you own a small business, like a laundromat, or you receive a bunch of cash, you don't report it all. And on the very large scale, right? There's billionaires who employ billions of dollars. There's a multi-billion-dollar industry, lawyers, consultants, accountants, all of whom are focused on minimizing tax burden, who do activities that basically are unnatural in order to minimize tax burden. So this is like setting up headquarters in the Bermudas. And this is like buying tax shelters, that involve art and like leaving it in a garage for like 50 years, right? All these different activities that really rich people do, which are expensive and wasteful, but are logical responses to to high taxes. And so the idea here is that all these other taxes on income and on sales and whatever, those are actually, they generate all this wasteful activity, but tax evasion on environmental taxes is extremely low. Right? So think about tax evasion of, of your electricity bill, right? So your electricity bill has a bunch of taxes on it, but trying to avoid those taxes is virtually impossible, right? It's like, you tell Duke Energy, hey, I'd like to not pay this tax, they'll laugh at you. They can see exactly how much electricity they sold you. They see very closely, how much you took out, and they charge a fixed price, which is take it or leave it. Okay, so the argument here is that you're able to reduce very costly tax evasion if you rely more heavily on carbon pricing, carbon taxes, and ETSs instead of on other kinds of taxes. So the third factor is that carbon pricing is often levied on oil and gas, where production is unresponsive to taxation. Okay, so the idea here is that as economists, we might be worried about distorting behavior, about changing the way people act if we tax like labor or we tax sales or income. But if you tax something like a pool of oil, the amount isn't really impacted, right? Like people making decisions don't change their behavior based on these new taxes. And so, the prescription from public finance is actually to tax these things as much as possible. But we don't, there's no country that fully taxes away all the rents from their oil and gas. And so, carbon taxes represent an indirect tax on these kind of fixed factors. Okay, so all these things put together, the point of this paper that I'm about to present is that taxes that are carbon hit energy, and energy is quite different than alcohol, on cars or other kinds of sales. And so this actually has these beneficial properties, which can potentially be welfare enhancing. Please.
So when you say good for welfare, you mean good beyond the obvious welfare increase that we get from internalizing externalities with the carbon tax anyways, right?
Exactly,
So
yeah.
there's an additional benefit. Because
Yes.
It kind of reads almost as though it's the only benefit from where environmental economists.
Thank you for making that point. I forgot to say that like 15 years ago and 20 years ago, the state of the art for the price of carbon was like kind of uncertain, and like people didn't really know, what price you should put in at a social cost of carbon, which, kind of accounts for these environmental benefits. And so, people being very worried about this thought of like other ways you could justify it. And so this analysis does abstract from those and says, hey, there are these big benefits from reducing climate change and averting, global warming. But in addition, there are these, potential improvements to the efficiency of the tax system.
Thanks.
Yes, of course. Great question. Thank you. And so what do I do in this paper? So I'm not going to do this in so much detail because I understand that a lot of this audience is not economists, right? So I'm going to like walk through the intuition rather than the math. Okay, so I'll present first, but believe me, if you want to read the paper, the math is all there. First, I present an analytical model, which is basically, a calculus model of how firms and households act, which integrates these three factors: the informal sector, tax evasion, and recording rents, which are rents on fixed factors. Then we run a simple CGE simulation, a computable general equilibrium simulation, which looks at how big these effects might be compared to the cost of a carbon price in an optimal tax system. And we find that basically, our major conclusion is that a carbon tax can actually be welfare enhancing for emissions cuts between 12 and 15% in China, India, and the US. And more, so that's kind of like against conventional wisdom number one, which is that carbon prices are bad for the economy. Conventional wisdom number two is it's bad for developing countries in particular, who are extra uncomfortable with cutting carbon emissions, because we find that benefits in China and India are actually bigger than those in the US, potential benefits. And the reason for this is because China and India have higher confluences of these other factors. They have bigger informal sectors, they have more tax evasion, they rely more on Ricardian rents. And so the opportunity to kind of like iron these out through improvements in the tax system are actually higher. Question, please.
More tax evasion, do you mean in dollars or in?
In percentage terms. In percentage terms, higher fractions of tax are evaded in these other countries.
Okay, okay.
So the exercise, and maybe we are going to explain this later, but it's essentially it's revenue neutral for the government, no? Essentially, they're going to be reducing our taxes and replacing. So it's kind of it's an optimal tax exercise, essentially.
Exactly right. So the optimal. So just for everyone else, so the optimal tax exercise keeps overall revenues flat And the reason for this is because anytime you raise extra revenue, that's always going to produce some deadweight loss. So you kind of need to compare apples to apples, which means the same level of revenue, but a shift from one tax base to another. And this shift in the tax base then allows you to compare one system to another and see which one could be better, right? Of course, we know that most tax reforms are not revenue neutral, but it's the best way theoretically to examine which tax is superior to another. Thanks for clarifying that. And finally, we think our results are very generalizable to many OECD and developing countries. And just to, I don't know how much I should advertise, but like I just did a stint at the IMF, the International Monetary Fund, and like some of this work has actually reached up there. Where people are like talking about in developing countries the impact of carbon pricing on their informal sectors and on tax evasion. So, very proud of how this work has been kind of like seen outside of Indiana University. Cool. Yeah. Okay, so some caveats just so you set your expectations correctly on the presentation. So what we do is we show that the cost of a carbon tax can be negative using the same setting as the prior literature, right? And so we need to not think that this is a paper which, what we do is we essentially use a setup very, very common to the optimal tax framework where we reduce revenues from one tax and add it to a carbon price. So that setting. And we show that in comparison with the standard literature, we can achieve a negative cost rather than a positive one. And then we analyze how the different tax systems of countries, how the different like known properties of countries' economies can then affect the influence of a carbon tax. What it's not is a calculation of the optimal carbon tax. That is, what's the best carbon tax rate, right? We don't talk about social cost of carbon. That's a huge topic. It's in a different literature. We don't do a complete analysis, right? So we don't have, all the different sectors of the US economy. We don't have all the different types of taxes there. The idea is to present a stylized model, which shows that basically in this very simplified framework, hey, it seems like these factors are super important, right? And, they tend to dominate the factors that the prior literature considered extremely important.
No trade, no? So like no trade.
No trade.
They're closed economy.
Closed economy, extremely, extremely simple. Yeah. Okay, so hopefully I don't have to tell this audience that greenhouse gas emissions are a real and serious problem that if we want to limit climate change to 2 degrees Celsius, 1.5, whatever, we really need to cut very severely. Number one emitter of greenhouse gases is of course China. Number two is US. Number three is India. And these are leaders by a huge margin, of emitters compared to other countries. So it's these are the most important settings where climate change policy needs to happen. It's less well known that although the US and other OECD countries have a lot of leadership in carbon and climate policy, emissions are actually mostly going to be projected to be flat or maybe even declining over the next decades, right? So in other words, although developed countries are responsible historically for many of the emissions, actually a lot of developing countries are responsible for future emissions. So China, India, other countries are, they need to cut emissions. It's not mathematically possible to avert climate change unless you get them on board as well, unless they act as well to control emissions.
Was that last chart? That was just assuming current policy, or
yeah, this is EIA. They don't update it that often. So like it's like they don't, I don't think they roll in the most recent ETS by China, but so this is based on that. I'm not positive. Okay, so what do we do? I'll roll through this model a little more. Now we're getting into like the algebra and math parts of it, but I wanted to highlight kind of like how I model the different factors in case you're interested in learning more. So what we have in our very simple model is 4 types of firms that produce goods. So manufactured goods are defined by their inability to be reproduced in the informal sector. So basically so many things like jumbo jets and cars are like pretty impossible to produce in your own garage, right? Or like you try to produce a phone and it's like, no way, impossible. But then there are services, and these are defined by their ability to be reproduced in the informal sector. So this is like domestic care, nanny services. It turns out construction is a huge one. So like informal construction is a big part of many economies. So formal services are those that operate in the formal sector, and informal ones operate in the informal sector. And then there's energy. So the one pre-existing tax in the economy is a tax towel on labor. And then when we reform, we cut this tax and we introduce a new carbon tax, which we call Tau P. And so we introduce a revenue neutral policy, increasing Tau P and decreasing Tau O. So how do we model the informal economy? Again, I went over this intuition a good bit in the intro, but we defined informal production as occurring outside the tax and regulatory system. So again, in the US, these are, the major sectors we have like informal finance is a big one. Informal construction is like a big one. There's like informal, like domestic help. But in other countries, right, it's like much more stuff. So in like Mexico, there's been documented, they actually have like informal factories producing like bricks. They have lots of informal sales on like the side of the road in like China and India and other countries. So a lot of the sector actually is huge. So I have a chart here. So if you're a US citizen, if you don't have a lot of intuition with the informal economy, because it's only like 8% of GDP, but in other continents, it's actually enormous, right? So like 40% of GDP is like a huge figure, which means like there's like another set of states like underneath that are all informal and not recorded. Even in Asia, like China, it's like 30%. So again, enormous swaths of the economy are informal. And the intuition is that these informal sectors actually still have to purchase energy. So you still have to purchase electricity and gasoline from the formal sector. And so when you cut taxes, you also decrease the advantage of the informal sector. In other words, what we're saying is that part of the reason the informal sector stays informal is because of taxes, right? Like think about like operating a painting business. Okay, so you have a painting business. If you paint like your neighbor's fence, maybe you can do that informally, no problem, right? But you scale up, right? And you paint your neighborhood, and then maybe like the town of Bloomington, and like you actually need to scale up like a lot more. You need to advertise, you need to hire workers. And so like there are certain reasons you might stay informal, avoid tax. And the argument here is that basically, if that tax gets cut, like these other reasons to stay informal get cut, and then your cost of energy goes up, the cost advantage of staying informal actually goes down, right? And maybe you want to avoid the stress of like continually being caught, and you decide to become formal, you decide to, incorporate and pay your taxes, right? And so that's the kind of intuition behind why taxing energy might be a really good thing for the economy. Just kind of spread out this tax base, not only to formal firms, but also to reach informal ones. Okay, and so the way we model it, this is a really cute mechanism we found in another paper. Basically, the idea is that we say that they're perfect substitutes. Now, are informal services and formal ones perfect substitutes? Not in reality, right? Like, I don't know, like getting lawn care from from an incorporated firm is a little bit different than getting lawn care from like your neighbor's kid, right? But it's pretty close. And the idea for this mechanism is actually to help you govern the size of the informal sector. So basically, the way customers respond is you see all these cheap marginal units of informal services, and they buy these things. And then as soon as formal services cross the threshold, they're like, wait, now we can achieve constant returns. So, and so they start buying these as well. So as these lines shift up and down due to taxes, right, the size of the informal economy, which is this horizontal distance here, goes up and down as well. And so that's kind of the intuition for how the size of the informal sector reacts to changes in these tax rates. Okay, so the second factor we talk about is tax evasion. So tax evasion and tax avoidance are closely linked concepts. So for your benefit, tax avoidance is like legal ways to avoid taxes. So this is like structuring your activities in such a way to avoid taxes. So like my family, we tend to cluster our charitable donations because of the large standardized, this is too technical. Okay, so like, this is like companies setting up in like Bermuda, okay? Or like incorporating in like Texas or something. You want to do these things in order to minimize your tax burden. But if you think about it, it's actually like a little bit artificial to set up in Bermuda, because you have to like build this headquarters there. You have to have people like operate there and like do paperwork for you there, but it's actually quite expensive to do this. Okay, so like that's tax avoidance, which is legal. And there's tax evasion. Tax evasion is like illegal ways, right? So things that you might do that the tax authorities would frown upon. So this is like illegal tax shelters, pretending that you didn't buy and sell crypto, right? Or something like this, right? Where it's like, if the IRS found out, they would definitely charge you because that's fraud. Okay, so this incorporates both those ideas. But the point here is that all this stuff, all these different like ways we react to taxes are actually quite costly to the economy, right? Like there's all these lawyers and accountants and consultants, and their whole job is basically to help people run away from tax burden, right? And it's actually quite expensive. It's in economists think it's like quite wasteful because they're not really making anything except helping you structure your behavior in a way that avoids the tax man. So the idea here is that if there's taxes that are extremely hard to avoid, like I'm going to show you carbon prices, like energy taxes, then you wouldn't spend all these wasteful resources, right? All these headquarters in Bermuda and wasteful accountants who spend their whole careers like helping hide another $1 billion for Bernie Madoff, like all these people would become unemployed, and that's good because they do something else with their time and money and effort. So there's lots of reasons why carbon taxes have very low tax evasion properties. Some of these include, argue that there's very few energy producers, right? They're tied to like pools of oil or natural gas, and this is extremely politically sensitive, right? Like it's very hard to hide, and people know very closely, like, hey, you're drilling in my backyard. There's this new CBS show, Landman. People see this thing? So good, right? So good. Okay. Like it's about like basically wild, like kind of finding land to drill for in Texas. Okay, so like this Billy Bob Thornton is this like guy who solves problems for this huge oil company, and it's like Hollywood, right? So he's like finding like drug cartels, and there's like trying to talk to like what's my point with this? My point is that everyone knows where oil is.
You got a TV recommendation too. That's a good point.
The point is that people know when you're drilling for oil. Okay, it's not like even in like Zimbabwe, Congo, whatever, like places that have a lot of oil that people are like trying to steal. It's like at least they know. Like if you're the army or the police, like you're either cooperating because it's obvious what's happening. Energy production is super easily observable, right? It's very hard to hide, at least compared to like a nanny or compared to like a drug deal. Energy collects in choke points before sale, right? So electricity must flow through like central infrastructure before it gets distributed to your house, and it's metered, right? Oil collects in these huge pipelines, oil and natural gas. So it's actually really easy to see exactly how much goes in and how much comes out before it reaches you. This paper by Metcalf and Weisbach found that 80% of US emissions could be covered by collecting tax at 3,000 points. So this is like, this is like oil pipelines, electricity stations, and in some places you have to manually check, like coal, like coal mines. And so that's the only part where it's like maybe harder. It's like, just distributing coal. But most emissions can actually be checked relatively easily. And then they have empirical evidence. So they collect evidence, they collect statistics on the tax evasion rates of different types of taxes in Sweden. So Sweden, of course, we think of them as extremely honest, but tax evasion there is actually quite high, right? It's upwards of 30% of most of their taxes. Oh, I'm sorry. This is the row. I'm sorry, this is the tax rate. So their tax rates are high, but their tax rate on energy and environmental tax is actually extremely high, like over 100%. And this right-hand column is tax evasion rates. Right, and you can see that income tax evasion rates. So the big one here is VAT. So VAT is like a system where like you have to report what you buy and then report what you sell. And the whole purpose of VAT was to avoid tax evasion, right? Basically, this double reporting system minimizes the opportunity to evade tax. And you can see that even VAT has a pretty high tax evasion rate compared to energy and environmental taxes, which are actually virtually impossible to evade. Right. So even in Sweden, where tax evasion is quite high, these other kinds of taxes, you get almost nil in energy taxes, implying that carbon tax, you can do, and it doesn't raise evasion very much, meaning there's much less wasteful activity that goes on. Okay, and so how do we model tax evasion in our model? We have every tax evadable by some rate epsilon I, where if epsilon I is 0, then there's 0 evasion going on, and if epsilon I is 1, then a tax is evaded completely. And we give each tax, importantly, a per unit cost to evade, right? Which is like increasing in convex, meaning like if you want to evade a little bit, so like you're a waitress pocketing tips, it's like not that expensive, you're not doing much stuff. But if you're like Elon Musk or Jeff Bezos, and you're trying to hide like, $1 billion or avoid, right? Not even evade, avoid like billions of dollars of taxes, then you structure your activities in such a way that like basically you're not hitting these like multi-billion-dollar tax burdens. So the idea of these costs are increasing convex. So, when you decrease the amount of evasion in labor tax, it more than makes up is a big benefit to the economy to avoid all this wasteful behavior. Okay, third idea is that carbon taxes tax immobile factors of production. So these when you tax like a fixed factor, meaning like a pool of oil or like a field of natural gas, the rents on this are called Ricardian rents, which basically are like profits that don't change. So production doesn't respond to these taxes. Now, optimal taxation recommendation is we should remove all these Ricardian rents. In other words, we should tax away these rents from these fixed factors completely, because we're worried about distorting behavior, changing people's behavior. But no actual government does this, right? Short of like owning it. So this is like maybe Saudi Arabia can do it because it has a company, like a government company that controls all the rents. That can be done, but the US definitely doesn't. We have severance taxes, ranging, I think it's like between 10 and 25%. But we actually want to tax away all these rents. And so a carbon tax can actually act as a surrogate tax on these rents and thus be less costly than we expect. So some evidence of this is like, if you look at the world oil supply, it's actually like quite steady and like rising, but the real price of oil like fluctuates all the time, indicating that like people want to pump this stuff no matter what the price is on a global level. On a micro level, companies are going in and out of business, right? But globally, the supply is quite steady. Same thing for natural gas, where it's like, hey, we're seeing an increasing amount of natural gas that gets produced, even though the global price of natural gas, has gone through dramatic rises and falls, right? So, the idea here is that if we taxed away much more of these profits that oil and natural gas producers get, we would actually raise revenue without costing society much welfare at all. And so carbon tax does this. Okay, so this I won't walk through the intuition of, but here's the idea: is that incomplete taxation leads to Ricardian rents and profits that we want to tax away through the carbon tax. Okay, so we put all this together in algebra. I'm not going to walk through every part of this, but we have an explicit solution, an explicit analytical solution, which economists like value. And sorry, flip back and forth. And that solution looks something like this. There's like a lag between this and that. So let me just click through. This is better. Okay, and so the idea is that we measure the change in welfare to the economy of this tax neutral reform of bringing in a new carbon tax and reducing the labor tax into a pollution effect. So this is the benefit of reducing the environmental externality, right? So reducing carbon in the economy. This is the tax base effect, which is the prior literature has found is basically the impact to the tax base of concentrating your tax from many things into like a narrow tax base, like the carbon tax. And then we have these three additional effects: the impact of informal labor, the tax evasion effect, and the rent effect, and that we show in the paper that all these three things contribute positively to welfare. Right? That's the bottom line of this analytical model. Finally, we run a CGE, a numerical simulation, which attempts to quantify these, right? Which says, okay, so these three factors, if they're true, are they important? And so, we calibrate them to China, India, and the US. And the important part here is a point I made earlier, which is that here's a table which shows the share of these three factors: informal sector, tax evasion, and Ricardian rents. And notice that for all three of these, like China and India, have larger shares of these than the US does. They have bigger informal economies. They have larger resource rents or Ricardian rents, and they have much more tax evasion than the US does. And what I'm trying to indicate here is that conditions in China and India and many other developing countries are actually much more ripe for tax reform. In other words, that because their tax systems have larger opportunities, there are greater rewards that can be gained if they shifted to a carbon tax, right? If they shifted to a price on carbon. And that's kind of the intuition for why we find bigger benefits for them. So this graph, I'll slow down and talk about because it is probably like the central, like captures much of the central result in the paper. So the horizontal axis here is how much abatement occurs. So if the US abates 5%, right? That's this line here, or 10% or 15%. And the y-axis is the effect on welfare. In other words, how are people affected, right, by this tax reform? And so the thin lines represent the US, China, and India in the absence of any of these three factors. And notice that they're all below the x-axis. What that means is this is classical literature, right? The preconceived notions, which is that when you cut taxes, even through a tax neutral reform, like a carbon tax, a revenue neutral carbon tax, you're hurting welfare because you are concentrating taxes on few commodities instead of many. All right, so these three lines represent kind of like the captures the prior intuition on this topic. But these three thick lines, US is red, China is blue, India is green, captures what we find, which is basically, if you think about the benefits from improving the informal economy, from improving tax evasion, from taxing Ricardian rents, you actually get welfare positive reforms. Notice they're above the x-axis. In layman's terms, what this means is you can cut carbon and make the economy better by reducing the amount of tax distortion in the economy, right? By reducing the size of the informal sector, by reducing how much costly tax evasion occurs. And so that's kind of like the major point of our paper is, hey, quantitatively, these things seem to be actually huge. Please.
It appears to cross into negative welfare.
Yeah.
Effects at around 12.5%.
Yeah.
My question is how does that correspond to the rate at which we would need to reduce greenhouse gas emissions to get to the goals that we have?
Great question. So I would say that reductions of 10 or 15% are extremely ambitious in the case of like China and India. Like they're kind of like still growing emissions at a very high level. And that question of like how much do we need depends on like how do we distribute the abatement, right, between countries. So that is like still an unresolved like question philosophically. Like some people, like my old organization, the IMF, felt that richer countries could bear higher percentage cuts of their emissions than poorer countries. And many people think that's philosophically true. Others find it unfair because it's like China and India are going to be responsible for future emissions. So it's a difficult philosophical question. Is my short. I don't have in this table or in this presentation like graphs of how much emissions have to be cut to reach like 2 degrees Celsius and 1.5 and stuff. But like if you're following the like IMF stuff, I want to say it's like almost 50% basically by like 2050. So that's beyond the scale here. So even if you are like 50%, we're still doing a lot better. But then the tax cost of these very heavy carbon taxes begins to overwhelm even the benefits that I mentioned.
Yeah.
Saying even 10% is actually huge. Like would be tremendous cuts in the U.S. economy, in the context of the U.S. economy and other countries. Please.
Maybe if I can follow on it, I mean, this assumes that there's no negative effects of climate change on the economy, right? Like,
Yeah.
So that's maybe something to keep in mind. We can't assume that we would be able to continue to have as high GDP and so on with, ecosystems collapsing and all of these things, right? So this is, I guess, holding all of these things constant.
That's right. That's right. Yeah. True.
So I would be careful stating that a carbon tax hurts welfare, right? Because we are internalizing the externalities and all of the other costs, right? So this is.
Yeah. It's everything you're saying is true, right? That like that we could be talking about environmental benefits that are definitely not captured, not attempted to be seen in this figure. Okay, but this captures our main message, which is that like you actually can have a win-win reform, right? You actually can, contrary to what Prime Minister is saying and Barack Obama think, you can have like improvement in the economy and cut emissions by a very substantial amount. Like 10% of U.S. emissions is a lot, and that's what my paper argues. We do a lot of sensitivity checks to look at like, hey, if we try different level of these factors, how does it impact it? And the main message is the qualitative messages still stand pretty strong. Okay, so what have I tried to convince you of in this presentation? Let me just refresh. So we try to say, hey, policymakers have ignored three important properties of carbon taxes, right? That they can that they can act on the informal sector, that they reduce tax evasion, and they can reduce Ricardian rents or taxes on fixed factors, profits with fixed factors. And what we demonstrate is that, hey, you can achieve carbon dioxide emissions reductions of between 12 and 15% through a revenue neutral tax that also can boost the economy in all three countries. We also kind of make this argument that in industrializing countries, which have higher levels of tax evasion, higher levels of informal sector activity, higher dependence on Ricardian rents, welfare gains can be even bigger. And this idea is important, which is that kind of the way that climate change policy is negotiated now is almost like prisoner's dilemma style, where it's like, we're only going to act if every other country acts at the same time. All right, every other country has to cut because if I do anything by myself, I look foolish, if other people don't cut. What we're arguing here is that actually it's in each country's unilateral interest to cut carbon through a carbon price because its own tax system is inefficient enough where it can make improvements disregarding all the talk about social cost of carbon, disregarding any benefits realized, hey, we're helping prevent floods in Africa. Is this worth anything to us? I mean, not thinking about those considerations, right? Whether it's valuable or not, no philosophical debate. In your own economy, it's worth it if you just think about a carbon price for these reasons. Okay, so that's what we think our research is headed.
So do you want to keep the queue in the chat?
I certainly can.
And then I can
Yeah, that would be
also
cool.
start. So students always have the priority. Go ahead, please.
Thank you very much. I think this is very interesting. So my question is to see if I understand. So when you're saying welfare, you're mostly looking at the supply side, right? You're looking at cutting those like Ricardian rents. You're looking at like the tax evasion, how you can sort of like generate tax revenue. But I'm wondering, and I'm sorry if I missed this, what is the impact of, for example, this tax on sort of like the economic incidence of the tax? Like, how is that going to be distributed back towards sort of like the demand side or the price, or how does that change consumer surplus, for example, by implementing those taxes?
Yeah, good question. So it's widely held that carbon taxes are regressive. That basically poorer households spend higher fractions of their incomes on energy than richer households do. So I think the stat in the US was like poor households can spend like 10% of their incomes on energy, and like rich households are like 1 or 2%, just because they buy more absolute energy, right? Like you've heard of the heated pools and like the bigger houses and whatever. On an absolute scale, they do, but relative to their incomes, it's a lower fraction. So the typical prescription for this has been that you take some of the revenues earned from a carbon tax and you actually enact lump sum transfers back to households. So targeted transfers, and that can actually be welfare improving. So typical mixes that that organizations recommend, like World Bank or IMF, are like some kind of mix of tax cuts and lump sum transfers, because this mix helps improve the efficiency of the economy and also can kind of minimize these effects if they're targeted towards poor households.
Or you have a subsidy back with whatever tax revenue you generated, right?
Yeah, some kind of like, so this was like, this is actually done in all countries. Iran cut its subsidies for gasoline, and it actually wrote households these checks, right? And the checks were gratefully received, and people were like, okay, this makes perfect sense that you're cutting these subsidies this way, right? And that actually is, if distribution improving to do a reform in that way.
So the idea would be that because energy is inelastically demanded, there would be a shift in price after you institute the tax, right? So at the end of the day, the consumer will be paying more on their energy.
Correct. The entire point of a price on carbon is to raise prices. That's like a goal of the carbon, is because you want to reduce demand for carbon intensive products by, like gasoline, by increasing the price.
Maybe I can add on to that. We have in Austria also a tax redistribution. So it works basically in the opposite way, we would say, as economists. So it happens before the beginning of a tax year. Every household, you just receive from the government, a transfer on your bank account, which would be the redistribution of the carbon tax. And
Country is this? I didn't know that.
Austria.
Austria, wonderful.
Yes, so they try to do the same in Germany, but bureaucracy is sometimes difficult. But I wanted to add that point. I think this would be a nice additional contribution, right? So you increase the tax income, and therefore that revenue could be used to redistribute, and that would also be inequality reducing, right? It's not just welfare increasing, but it's also inequality reducing, which
Yeah.
I think it's something that's very important in the discussion right now with carbon taxes.
Absolutely.
It might be so based on your arguments, we might be underestimating the benefits we could have from the.
Yeah,
recycling.
that's right.
Yes. Nice, thank you.
So building on this question, it's a more sort of political economy question. And I'm thinking of this two separate questions, but they might actually be really related. One is that if you think about where we're talking about places with 50% informal economies, right, like sub-Saharan Africa, a lot of these places, they can survive because of those informal economies. And it's not clear, A, how they would move into more formal economies, given that many of the things that doing are not, there may not be like versions of the formal economy. More generally, even if you could and you have this effect, that tax is not getting redistributed. And so my question here is,
When you, that tax, which tax you mean?
I mean, essentially that increase in revenue that is coming from essentially, right, the carbon tax that you're talking about,
Yeah.
that could present additional resources for redistribution is really gonna be regime contingent. Right, and so the very places, maybe not so much India, although possibly, right, but the very places where this would have the largest effect would be the most reliant on like benign, benevolent leaders, right, to actually realize a lot of those benefits. Maybe that's wrong, but I'm sort of trying to think about the fact that, you know, like I think it's a really like obviously very important contribution to demonstrate where these would be the most effective, especially given the existing assumptions, right? My question is really like, how do we think about, or how should we think about the extent to which those benefits and the extent, and particularly we would want to realize them in the context that Natalie's talking about, are really contingent on the like the domestic politics and the sort of regime type. I know it's outside of the scope,
No, that's okay, that's okay.
but
Yeah, the kinds of redistributions you're talking about require pretty advanced administrative systems, which maybe even the US doesn't have, you know, like.
the incentive to
So, it's because it's just logistically hard. Another way to rephrase the optimal tax question is, if you want to raise $1 of revenue, what's the best way to do it? Right? So additional money, which everyone needs for bridges or roads or whatever. If you want to do it through a labor tax or a profits tax, which is a sales tax, which is how many countries think about it, or an energy tax, right? My argument is basically an energy tax has these other nice add-ons. So even if you are, you know, a sub-Saharan African country with high levels of dishonesty, you should still consider this because it's like contingent on raising money, this might be a better instrument. That's the argument.
Let me just add one last thing, because it's not just about like dishonesty, maybe like in the informal sector, but I mean like the value of those tax dollar, that sort of additional revenue raised, like has to not go into somebody's personal bank account.
Sure.
Right? And many of the places that we're talking about do not have systems that prevent that. And so I'm sort of trying to think about how do we think about the revenue, the sort of welfare improvement outcome assumption, which is baked into most of the way that we think about sort of economics in this context,
Yeah.
in these really varying regime contexts. Or can we?
Yeah.
Again, outside of the scope, but I'm just sort of.
It's okay, it's okay. Most of my argument relies on relative dishonesty, right? So like there could be very high levels of theft. I guess if you want to put the optimal tax question another way, it's like if you want to steal $1, what's the best way to steal it? Through a sales tax, through an income tax, or through, and the answer is it's better for your economy to steal through carbon tax, right? Like independent of how you use the money. Even if it goes to zero improvement stuff, just to get another private plane for yourself, right? It's still better to steal it through this way because you can track it, because it doesn't at least feed the informal economy, et cetera.
Okay, I'll go with
There is one,
missing.
there is one from online too, just
Oh,
whenever.
yeah, please go ahead. Yep.
Eric Norman was just asking, he said, several years ago, I saw a presentation from RFF on the Porter hypothesis that strict but flexible environmental regulations can reduce pollution and increase business performance. Would you say that your research results lend support to the Porter hypothesis? I can say it again too.
Yes, please.
Yeah, no problem. So yeah, he was observing, he saw this presentation on the Porter hypothesis, which states in part that strict but flexible environmental regulations can reduce pollution and increase business performance.
Okay. I'm not familiar with that paper. I'd have to think about it more. That's hard. We're talking about regulations that are tax. We're talking about, I'm not sure the mechanism, so I'd have to study that more.
That's totally fine. Maybe Eric, if you want, oh, go ahead, Eric. Yeah, please go ahead.
Yeah, it was just, there was a workshop at RFF. It was probably more than 10 years ago now on the Porter hypothesis. And Michael, I think his name is Michael Porter. He was a business management professor at Harvard. And he was not an economist, but he kind of put forth this idea, that became the Porter hypothesis, that if you had strict but flexible regulations, environmental regulations, that like a tax, a market-based approach, like a tax, cap and trade, that, yeah, it would reduce your environmental pollution, but also that it could reduce or improve business performance through, and then scholars kind of figure out like, well, how would it do this? What are the mechanisms? And, basically it's the firms are internalizing some inefficiencies and remedying some of those inefficiencies within their own business practices, because that pollution is waste. So if you're reducing pollution, you're making your business more effective, and also the flexibility allows innovation to happen, and then there are innovation and knowledge spillovers. So it's not just staying in your facilities department, your whole business is becoming more innovative, and you build this culture of innovation. So I was just curious, that's kind of like on the macro individual business level, but you're operating at the national level. But do you see, I don't know, do these two worlds kind of plug into each other? That's just what came to mind.
I see the connections you're describing for sure. I think, like, bigger picture speaking, I think a lot of environmental economics is concerned with trade-offs, right? So the idea is you can improve environmental quality, but only if you hinder, if you put regulations on cars, or like you restrict people's freedom to X and Y. And so kind of this idea is to, when you can find a free lunch, like the one you're describing through the Porter hypothesis, or maybe through carbon taxes, like I'm finding, that's almost like, wow, like you're breaking the trade-off kind of paradigm and looking for win-win. So yeah, I think it's very philosophically related to what you're describing.
Thank you very much. I really enjoyed the paper.
Oh, thank you.
Thank you, Eric. Yeah.
Okay, I really appreciate your excellent teaching, and I just want to make sure I'm clear on the story so I can go tell my family about it at dinner.
My family did it. They're like, Dad, why are you talking about this? I'm like,
Okay, so here's my understanding, so please fill in. Okay, so we add the carbon tax, we lower the labor tax,
Yep.
which lowers the threshold of informal sector paying taxes, and so more people join the formal sector.
exactly, yeah.
And so the country earns more money at the
Yep.
end of the day, because is welfare measured as GDP?
No, welfare is a little bit, it's measured loosely speaking by consumption, by like how happy households are.
Okay. What do you mean happy?
We assume back here, I didn't go into this, but basically economists assume like there's this magical thing called utility, which is how much people buy and like how much they don't work, right? So like having more stuff and working less is like makes people happier. That's the assumption. And also having a cleaner environment, right? So these three things like kind of control utility in this little algebral world. And so basically we're saying people's welfare gets improved by this reform, like their happiness, well, basically.
Okay, okay. I'm totally tracking you now. Thank you for going over that one more time.
Yes, of course. Sorry, I skipped over that. Like it is the economists try to explain it to non-economists. People are like, why did you do that? And I don't know, it's just the way we do it. Like
So I think I go, and then I don't know if I miss some hands, I can come back.
but you captured the idea perfectly. Thank you so much for explaining that in an intuitive way, the informal sector stuff.
So, two comments. So the first one is when you show the example of, I think it was Sweden, okay? So the starting point is not zero energy taxes. It's very high energy taxes, no? Which is probably true in many countries, no? Even developing countries, no? For example, gasoline taxes are well extended in many countries, okay? So if that's the starting point, you get this type of big effects, or given the starting point, you are already in the traditional standard trade-off range, okay? The second question is probably less important. It's related to the specific factor component. It's, well, yes, we observe that energy production goes up as kind of upward trend, and then huge variation in prices. But then now suddenly you come and you just chop the increases in prices, then essentially they're expecting low prices forever. And there is exploration and there is investments to put new resources in production. So suddenly I'm not quite sure that this works as a pure fixed factor in whatever, in a 50-year period, okay?
Yeah.
So if you add a little bit like that, also how this, so could be very sensitive to how you model that supply,
Sure.
some of the effects, okay?
Okay, got it. Okay, so your first question related to tax rates and whether they're too high in other countries. So in Sweden, they're unusually high, right? We know Sweden is actually extremely environmentally friendly. They probably have the highest carbon tax rate in the world right now. I think it's like $300 per ton, so like something just enormous, like the highest point in the world by far. The IMF actually does work on other, are the taxes on oil and coal and gas, are they too high? And they find that, especially for the three biggest countries, the answer is they're much too low, actually.
Okay.
That as measured by externalities, we're charging much too low at a price on, where the US, for example, doesn't have any subsidies on energy, unlike many other countries, but we don't account for the external cost at all, right? Like in terms of greenhouse gas emissions. China and India they actually, I believe they also don't subsidize energy, but they don't account. So the answer is energy prices are probably too low, especially in these three settings. And in most of the world, the energy prices are too low. In many countries, they actually subsidize energy to make it cheaper than production cost. Okay, your second question regarding rents, it's a good point, to say, so like one question I've received is, if production is fixed, then how can carbon taxes be impactful, right? Because you have this fixed factor. But the answer is that like production is not only tied to the use of the fixed factor, but also like other inputs, right, as well. And these other inputs can be flexible. So like capital and labor investment can be flexible and responsive to the tax. So it is, when you're right that taxes have different effects than temporary upward downward shifts. That's a phenomena that has been empirically observed, that basically, so what I'm saying here is that people respond to up and down market prices in oil differently than they respond to a carbon tax, just because they know that one is permanent, the other is possibly temporary.
Yeah.
So, but the effects are actually much bigger for a carbon tax because they know, like you're saying, it's permanent, right? And so they adjust behavior in a more long-term fashion. But yeah, everything you're saying is extremely thoughtful.
Can I have a follow-up? So related to the first question. So essentially, Indeed, I like your model because essentially I really like, simple models that try to capture
I like simple too.
the core of the point. So
I
you
like
have
simple too.
labor tax, okay, and then the energy tax, okay, those are your options. But especially in these countries that essentially, if the idea is that the starting point is very inefficient, okay, maybe potentially there are other ways of improving their tax system, okay?
Yep.
And then maybe you have to be careful, because essentially maybe the other alternative of improving their tax system dominates the carbon tax, okay?
Yeah.
And then while you may persuade them your point still persists, no? So maybe you need less to persuade them to go to the carbon tax rather than to go in another direction. Still, they may have something else that dominates the carbon tax. So whatever.
Yeah.
So it's
No, the point you're making is actually the point that used to be made by this literature, which is like, if we start from an optimal tax system, a single low rate tax on every commodity, then any disturbance from that is going to lower welfare, right? By definition.
Yeah.
And so like that was almost like the starting point for this entire literature. So we start from this starting point, we point out a few tax inefficiencies, but what you're describing, where in reality we have many different tax rates among many different taxes, that actually improves the opportunity to improve the tax system if you think about it, right? Because there are these extra margins of inefficiency that are available. And so you're right, but I think it actually enhanced the results, right? Because you're starting from a less optimal tax system than this uniform tax that we described. So maybe it makes it even better.
okay. You have more online? Or?
Is that a question? Like how is the word getting out in the EU context with Sweden's example there? I mean, we have some colleagues here visiting scholars who are probably more familiar, but I mean, is this model being replicated pretty quickly, at least regionally? Like this?
Is this model being replicated? I know some of the ideas are being argued. I was really gratified to see that, it is, the World Bank and IMF give advice to other countries.
Yeah.
And, the effects of the carbon price on informal economy and tax evasion are part of the argument, for like, hey, maybe we should be thinking about this as a tax instrument if you want to meet your NDC goals.
Absolutely.
So that was really gratifying.
Well, that's good. All that progress.
Yeah, I mean, the fact that all these countries are rolling is actually amazing because, like I said, when I was a PhD student, my advisor was like, "You should study carbon taxes," and I'm like, "Why? No one's gonna use this thing." And then, like, in the ensuing decades, all these countries have rolled it out. And it's been, like South Korea and China and Mexico and Chile, all these places, South Africa have rolled out carbon prices, and it's actually, I mean, from a theoretical perspective, it's the best. So there isn't actually a great reason why people were just like viscerally opposed to it before.
There are any other parts of at least the US, like you put that graph up earlier that we talked about the little, regional markets that are being created? Is there any effort to link those closer together or to have new ones?
Things have been thrown up in the air by the election, by the new president. He hasn't yet like moved against the EPA. Like I tell my class, I teach environmental, like introduction to environmental science. Even Trump doesn't get the EPA because I mean there are a lot of demonstrable goods that the EPA produces. So, but he's also not exactly like signing up for more climate action either, right?
Sure,
it's kind of the opposite. So, it's not clear.
Yeah.
But fortunately, this is not like the only context in which this is applicable.
Right. That's right.
Is this one published already or no?
No, so this has been a working paper forever. We kind of like haven't moved in it in a long time. Like I think of it as like a really good presentation piece for my research rather than like next great publication. So
you don't want to move it out of working papers?
I mean, it's not a topper. I don't think it'd be super wonderful outlet anyways, but like it's okay. It's really, really useful for advertising my work. Like, other organizations that have seen it have been excited by it. So that's more important to me than like getting another, whatever.
So, can you talk a little bit more about where are the welfare improvements coming from, especially So essentially, related to the previous point on people moving from the informal to the formal sector is mainly coming through this convex cost of investing in avoiding paying taxes.
That's the tax evasion effect. Yeah.
That's the tax evasion effect.
Right.
Okay. So essentially, so what is going on there? So it's you are
Let me be super concrete.
yeah.
Okay, so suppose you cut the US personal income tax rate for billionaires is like 35%, right?
Yeah.
So suppose you cut that to like 33%, right? That means that like some people are gonna, on the margin, make less investment in, you decide instead of hiring 10 accountants, I need 9.
Yeah.
Right, which saves money. Instead of like needing to shelter in Cayman Islands, maybe I shelter in like in Ireland, right? Just a little bit cheaper, a little bit better. You make your next decision, needing to spend a little bit less money because it doesn't make sense for you to spend quite so much. That's where the savings get realized. And the point is like, for a new tax on gasoline or a tax on coal, it's like we can't really do anything to avoid that. So, just let it be. Because we can't, like in the case of Sweden, they literally can't avoid it.
And then what fraction of GDP that give you in a case like the US?
I'm not positive of the number. It's like,
Okay.
but non-trivial is like enough where it makes a difference in this welfare cost.
Yeah. So I was trying to think. So if you can tell us something about the contribution of each effect to the total effect, okay? Which I think you show some.
Yeah, we have
Yeah. So it's sorry if I miss it.
It's okay. It's okay. No, I went over this super brief because I didn't think people would want to see
Okay,
all
I
the
see.
detailed results of the simulations.
I see.
But we do have, so for example, this top set is like, so the idea here is that this is the change in welfare. So negative numbers mean hurts welfare, positive numbers means helps welfare. And so if you just have a single factor in each of these, then the numbers are still negative, meaning it still hurts welfare. 2 factors, it's like we're getting to near 0. And then 3 factors, we're getting to like almost all positive numbers.
See.
Right. And so like each of them kind of cuts it like a bit. And it's really in combination that like we're kind of reversing it and getting these 15% gains.
See.
This is for like this table is for 10% cut in the cost in the amount of carbon. Which again is, is maybe not enough to solve 2 degrees Celsius by itself, 10%, but it's like a massive reduction over what we have now. Like the policy increase is like tremendous over what we have now.
I think you're enthusiastic about this idea.
No, that's
You
good.
know, oh, I thought that you were writing. No.
Well,
Could you speculate on the following, which is, so let's say we get the 10%.
Yep.
Reduction, and we know then that any additional reduction needs to come from some other mechanism, some other policy mechanism or change in behavior to get to our, say, 2030 goal.
Okay.
Do you have any sense of like potential spillovers that would affect other policy instruments that we might have, right? So this is one policy instrument that could, could be revenue improve or sort of welfare improving, and revenue neutral in this case. But most things don't happen in isolation, right? Obviously, and so. Is there any way to speculate over the other things that we might need to do in addition, if this is 10% makes a big difference, but not all, doesn't get us all the way there, right? Again, outside of the scope, maybe not part of the, maybe you're not thinking about other instruments beyond this particular tax policy, but I was just trying to think of like, or anyone in the room, are there other sort of like, are there spillover effects from this kind of policy that would either increase or decrease the capacity to act in other sectors? I'm asking you to speculate.
No, that's, I mean, it's fine. So like a big policy that gets advocated now is promotion of renewable energy, right? So like subsidies for renewable energy, tax credits, feed-in tariffs, this kind of thing, all in promotion of renewable energy. There's actually some doubt in the economics literature whether these things actually reduce emissions at all, right? If you invest in renewable energy, so like most environmental economists and economists broadly are probably like vast majority in favor of carbon pricing over other types of policies. Are there spillovers? Yeah, for sure, because like the idea is carbon price will indirectly promote renewable energy by raising the price of coal-fired plants and natural gas. So, but you want to make it like easier, right? Like not make it so hard where people are like, I'm forced to like throw away this whole plant we built and like, build a new solar field out of nothing. You kind of like want to smooth the path a bit by like, making it easier, building infrastructure. So I would say the most helpful policies would be ones that kind of like, in some sense, like reduce the hurdles for other technologies to replace fossil fuel energy. But again, this is like pure speculation about. So, yeah, I personally, if like just personally, this me as Anthony, not me as like paper author, I'm like just feel like a lot of energy gets spent on policies that don't really address the problem. Like I'm pretty critical of these renewable energy policies because it's like doesn't feel it feels like it's more like handouts to these industries instead of like actually trying to reduce emissions.
There's one thing I keep thinking of, and it's again beyond the scope of your paper, but I've been into effective altruism for some time now. So I can give €1,000 to a charitable organization in the Netherlands, my country, but that €1,000 would solve would make people much happier when I do that, when I give it in Zimbabwe or anywhere else. This somehow relates to your thing as well. We're building solar fields now in the Netherlands, so large solar fields in a country that's clouded over almost half the year. If we would invest money having that solar field in Africa, it would be much more efficient. So I think it's a non-trade-off efficiency gain.
Yeah.
And somehow that I have the feeling it relates to your paper, but I don't know where. Perhaps
it's unlucky, right? People take uneconomic decisions responding to incentives, right?
Yeah.
And so you have to kind of like try to think through. Yeah, maybe it'll still pay off. This big solar field. Maybe the economics still work, but it seems tragic, to not be investing in resources better.
And that's also the question, an answer to your question. Are there win-win situations? Well, perhaps investing somewhere in the world in these energies where they profit most, it could be a win-win non-trade-off situation. But that would mean that the world should be the player and not unilateral countries, whereas your research, of course, focuses on individual countries a lot.
Yeah, right now. Mm-hmm.
I think success. Well, thank you so much again for joining us.
No, I'm so happy to get feedback. Super happy to get feedback from you guys.